Best Forex trading indicators every trader should use. Best Forex trading indicators every trader should use. There are many different Forex trading indicators available on the market. However, not all of them are necessary or useful for every trader. In this video, we will discuss the best Forex trading indicators that every trader should use. 1. What are the best Forex trading indicators? There are a number of different Forex trading indicators out there, and it can be tough to know which ones are the best for your trading style. Some traders prefer to use technical indicators, which use historical price data to help you make predictions about future price movements. Others prefer to use fundamental indicators, which look at factors like economic indicators and political events to help you make trading decisions. Ultimately, the best Forex trading indicators are the ones that help you make the most profitable trades. So experiment with a few different indicators and find the ones that work best for you. 2. Why should traders use Forex trading indicators? Forex trading indicators can help traders make better decisions by providing visual cues about what is happening in the market. They can also help traders identify trading opportunities and stay in line with their trading strategies. In addition, Forex trading indicators can help traders manage their risk by providing information about potential stop losses. 3. What are the most popular Forex trading indicators? There are many different Forex trading indicators available to traders. Some are more popular than others. Here are 3 of the most commonly used indicators: the moving average, the relative strength index, and the stochastic oscillator. The moving average is one of the most basic indicators. It simply calculates the average price of a security over a given time period. This gives traders a smooth line to help them determine the overall trend of the market. The relative strength index, RSI, is another popular indicator. It measures the strength of a security's recent price movements. This can be helpful in determining whether a security is overbought or oversold. The stochastic oscillator is a technical indicator that helps traders identify when a security is overbought or oversold. It compares the current price to the price range over a given time period. 4. How do Forex trading indicators work? Forex trading indicators are designed to help traders make informed decisions when trading currencies. Most indicators are based on historical data, which is used to identify patterns in price movements. There are many different types of indicators, each with its own unique method of calculation. Some indicators are used to measure momentum, while others are used to identify overbought or oversold conditions. Most indicators can be used in conjunction with other indicators to create a more comprehensive trading strategy. It is important to understand how each indicator works before using it in a trading strategy. 5. How can traders use Forex trading indicators to improve their trading results? There are many different Forex trading indicators available to traders. Some are more popular than others, but all can be useful in different ways. In order to get the most out of these indicators, traders need to understand how to use them correctly. One of the most popular Forex trading indicators is the moving average. This indicator is used to track the average price of a security over a period of time. It can be used to identify trend reversals and trend continuations. Another popular indicator is the relative strength index, RSI. This indicator measures the speed and magnitude of price changes. It is used to identify overbought and oversold conditions in the market. These are just a few of the many Forex trading indicators available to traders. Each one has its own unique uses and can be helpful in different ways. Traders who want to improve their trading results should learn how to use these indicators correctly. These indicators can help traders make more informed trading decisions, and improve their chances of success in the Forex market. With the right indicators, every trader can become a more successful trader.